time to maximize profitability and cash flow. It's time to learn habits and hacks from the best e-com CEOs. It's time for Return on Podcast with me, Tyler Jefcoat. Hey guys, Tyler again here from Seller Accountant, and we're walking step by step through our financial statements so that we can learn how to read them better, kind of demystify those statements and help us glean value so that when our accounting team, whether it's an internal team or an external outsourced team like Seller Accountant, gives us books each month, we can, kind of take a look and know if they're accurate, but maybe more importantly, use the data, use the information that it's giving us to make better investment decisions and make more money in our business. Section 1 was about revenue and income. Section 2, which was last week, was about what goes in cost of goods sold and how do you understand and manage your margins. And this week, what I want to talk about is everything else, kind of the expenses side of your P&L statement. Let's dive in and look at a couple of examples together. All right, we're back here with our trusty example of a profit and loss statement. We talked a lot last week about all the things that Seller Accountant loves to put up here above the gross profit line because we want to know what the true contribution margin is of our brand. But everything else, we still spend money on, right? Other expenses do still exist. And almost all of those other expenses go down here in the expenses category. That's going to be things like rent. It's going to be things like office expense. If we do any travel or meals and entertainment, if we have any professional services, attorneys or accountants, we're going to have a lot of software. So let me just tell you the difference between two categories that we use here at Seller Accountant. There is a dues and subscriptions where, hey, listen, let's say you have Gmail to do your email and it's kind of the backbone of your business and maybe you're paying for a subscription to the whatever Wall Street Journal. Those are dues and subscriptions. They might be software, they might not be software. But within the realm of software, there are a pile of e-commerce specific tools. This could be tools like Seller Labs or Helium 10 if you're an Amazon seller. This could be tools like related to email marketing or managing inventory. And the reason I like to separate these is one, is I want to make sure I'm keeping an eye on them because it's so common that we're spending money on 7 different tools to do the same things. But also, when you go to sell your business down the line, it's really easy to get your dues and subscriptions as an add back. It's a little bit more challenging to get e-commerce support tools. And it's just kind of nice to go ahead and have them separate for that reason. So, insurance, office expenses, any kind of like one-time product research and development. And then the biggest category tends to be employee expenses. So like, what am I paying contractors? What am I paying myself? What does it cost me to have my team run? And occasionally you may have like a marketing project that, again, listen, Tyler's the guy that loves to have as many advertising expenses as possible up in the gross profit area. But if I hire a consultant to be like a fractional CMO to help me drive my product strategy, that's not cost of goods sold. It's going to have to go down into kind of a consulting or marketing bucket somewhere else on my P&L. And so once you grab those expenses that we've just talked about, you're left with your net operating income. Net operating profit, pretty good story for the seller that we're looking at right now. And there are still a couple of things that fall below the net operating profit line. Things like other income and other expenses. Now, other income tends to be if you have a credit card that has reward points, if you get paid like an affiliate commission, but that's not really your core business. If you're also like getting rent, like maybe you own the warehouse and you're subleasing or leasing a portion of it to someone else, that might be considered other income. Matters for taxes, but isn't very important to understand the profitability of this core business. Well, those would go down in the 7,000 section. And then there's an 8,000 section that's kind of things like currency exchange losses or gains, or interest expense is the biggest one here. It's not on this particular P&L, but interest expense. What do we pay to borrow money is going to go down here in other expenses. Obviously, you're going to add or subtract that from your net operating income to give you your true net income when it comes to filing your taxes. The reason this is important, again, guys, is I want to make sure that I have my P&L separated in such a way that I understand exactly what my sales are. So this is kind of a summary of the P&L here. I want to make sure that I can understand sales by month on an accrual basis so that I can really follow the trends. I want to make sure that as many directly attributable expenses as possible are above the line for my cost of goods sold section, so that when I give myself gross profit numbers, they are not BS, but are real gross profit numbers. And then everything else that's down here below the line is just overhead. And I've got to be really careful, sometimes vicious, to kind of take a close look at those consulting services. Am I using them? Am I getting value out of them? I've got to really look at my e-commerce support tools. Am I using 19 different tools and I only need 5? Let's kill the tools I don't need. Let's make sure that I'm not overspending on office expenses or travel. I really need to be protective of my money below the line, because a lot of the money you spend down here isn't directly generating you more money. It's just a cost of doing business. And that's why we want to control those, so that when we, listen, we want our net income to be as high as possible. So to maybe ask the same question I did in our last video, what do I do if I'm not happy with my net operating income? What if it's not as happy a situation as the one we just looked at? So the second one I'm looking at here is really pretty close to break even. We got just a 3% squeaking by a profit in this business. And again, you have to diagnose, what is the real challenge here? And as you look through the expenses for this particular client, it kind of takes back to, okay, you know what? My overhead, my SG&A is not really the problem here. It's my margins. It's kind of like, go back to the prior video where it's like, okay, wait a minute. How do I improve my marketing performance? How do I make the engine healthier? But I still do need to ask the question, are there any wasted or unnecessary expenses here? Am I getting the value from the teammates and the vendors and the contractors I'm working with? Am I getting the value from the software that I'm paying for? Because you may be able to find small bits of relief down in your SG&A area. To be honest with you, in this particular situation, they're not going to find a lot of relief down here below the line. If you and I were to really scrutinize this profit and loss statement, we would come back to, we probably have $100,000, $200,000 problem, but we only have $30,000 of total expenses. We're not going to solve our problem down here. We're going to have to solve it by improving our profit engine for the business. So this is how I would kind of look at the overall P&L in the below the line SG&A. That's like selling, general, and admin expenses that go below the gross profit line. Next week, we're going to pivot. We're going to put a different hat on, and we're going to look carefully at our balance sheet, which is sometimes even more mysterious to sellers than the P&L. Come back. I can't wait to talk to you about it then. Cheers.